Hello, traders, again from Chicago. It is 8:01 a.m. Chicago time on the 26th of August, 2021. Welcome to Thursday's trading session. This is episode number 2060. 2060 derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Again, we'll follow the routine process. That's what makes a trader. So as you notice, every day it's exactly the same process, and that's just how it is. As traders, over a career, you become very, very repetitive with what you do day in, day out, with minor modifications as the market evolves. So what is the risk posture this morning? Mild risk off and recovering a little bit until just now, where the S&P dropped, or the indices dropped across the board a little bit. But overall, the market is has a mild risk off posture, mostly led by European stocks falling. The S&P is down 11 basis points. The DAX is down 42 basis points. The Euro Stoxx down 30 basis points. The NASDAQ's off 35, 36 points. NASDAQ opened and ran lower into what was short-term support at 15,297, and it went to 15,295. Currently, the overall play is everything is just slightly lower. You can see that allocation is coming out of pretty much everything and into the dollar slightly, including out of treasuries. Treasuries down. The 10-year notes down 5 big ticks. The 30-year bond is down 11 ticks in the futures. The Bund is off 18 euro cents. And that's where we are. Before the market opened, we got Dollar General, Burlington Stores, TD, Toronto Dominion, Dollar Tree, and Canadian Imperial. After the close, we're expecting some big-ish names: Gap, HP, Dell, Marvell Technology. Mainly the market's paying attention. Well, the overnight session, we saw that China was starting to make moves to support exporters, retailers, hotels, as that stock market's been getting hammered. If you haven't looked at it recently, worth a look. In terms of what's expected for today, really today it's all about Jackson Hole, right? We're looking for a market that is likely to sit sideways in anticipation of comments from Fed's Chair Powell. Jackson Hole was moved to an online meeting, and Fed's Powell's expected at 10 a.m. Eastern, and we're going to be paying very close attention to his comments on inflation. Is it really transitory, or is it something that's going to stay here? Remember, the market dropped last week on the FOMC as a result of potential tapering, and if the Fed is tapering, why is it also saying that inflation is transitory, right? So that's an important one. And then at night, we get retail sales out of Australia at 9:30 Eastern. I thought Jackson Hole was today. Yeah, I think Jackson Hole starts today, as far as I know. Let me know if I'm wrong. I'm pulling that right out of the Wall Street Journal. The S&P. The S&P currently balanced 153,000 contracts. Is it tomorrow? Man, how is this? Maybe Jackson Hole starts today. Oh, I see. Yeah, that's my bad. Yep, you're correct. The symposium starts today, and Fed's Powell is tomorrow. So we're prolonging this sit and wait period, I guess. Yeah, I apologize about that. That's inaccurate. I do get the things wrong every once in a while, but but overall, We're likely to continue to sit sideways here near highs until we hear what he has to say. The condition of the S&P is balanced. Volume's 153,000 contracts so far in line. Inventory's 93% short, and the range is 14 points this morning with a point of control of 44.87 and a quarter, and generally pretty sideways after opening and pushing down. Okay, so that's where we stand. Mike's a little low. Okay, I hear you. Should be better now. Let's turn it up just a tad. Okay, so that may be too loud. Seeing red. So that's what we've got. Let's take a look at what was expected yesterday. Yesterday was expecting, the market was looking like it was opening in range of the balance day on Tuesday, and the overnight session carried over the balance, and so expected a choppy open, but was also looking for it to kind of to test down towards the 80, towards the 80. That's what we talked about here. Pull back to the 80 area, big MC point of control there, and then we expected it to push towards 4,500. So the range for yesterday, the anticipated range for yesterday is 80 to 4,500, the century figure. Okay, here's what we got. We got yesterday, let me clean this up for you. In our review segment, what we got, for one thing, note, so this is a 3 pixel per bar chart, standardized. You can see the rotations. Remember, this is not a time-based chart. It's a rotation-based chart. And one of the quick gauges I use, because I'm not using a time-based chart, is how much space or how many bars did it print on the particular day, and it gives me a sense for what the rotations did that day. And you could see that Tuesday was pretty awful, and then yesterday expanded a little bit. But overall, when we zoom in here and look at yesterday, we see that we did in fact open. It was open in a chop. It did pull back to the 80. It missed the 80 by 3 ticks, and then pushed back into the prior day's high. We have a double top right here, pulls back to the open, and then takes off, consolidates, and then ends up pushing into 44.98. We expected 4,500 to be the top, so relatively close. After balancing yesterday, after balancing on Tuesday, we did expect some sort of a breakout because Tuesday's range was very poor. The volume was quite poor as well. The volume was not was the lowest we've seen since the beginning of the month, since the day before non-farm payrolls, August 5th, and so since then, we haven't seen such poor volume. I think we had 561,000 contracts versus the expected 1.1 million for the summer, 900,000. So we were off 40% on volume. So the next day, we expect to chop, and push in the direction of the trend. And so that's where we ended up. We ended up with a P-shaped profile, another squeeze higher in balance, and we're accepting 44.95. So we've accepted 44.80 and have built the point of control of 44.95. Remember those numbers going forward, okay? So not very much to talk about there. Is my mic still low? Let me know. Shouldn't be. So what have we done in the overnight session? The overnight session, we opened and we immediately fell off. You could see the same thing here in the NASDAQ. The NASDAQ opens and immediately falls off. We fall off and we maintain below We maintained below yesterday's settle for almost the entire session. That's where we get the overnight inventory at about 92%, 92, 93%. So what we've done is in the overnight session, we have a very clear and prominent point of control at 95, and we've held below 95, the high in the overnight session at 94 and a quarter. And so what we're doing, what this is saying is we've balanced at 80, right? Remember 80, I just talked about it. Then we've balanced at 95, and the overnight session is exactly between the 95 balance and the 80 balance. So 44.80 in the overnight session. So 80 is acting as support now, the MC point of control there, and 95 is acting as resistance. And so overall, what this is doing is it's balanced at 80, moved to 95 yesterday, and it's saying we're hanging out in the middle here, and it's filling in the middle. It is repairing the middle, and we can see that more clearly as we put up a profile like that. So if I actually extend this profile back to encompass the 80 zone right in here, you can see that we've got a fat profile down below, fat belly, and a smaller belly, and in the overnight session is basically filling in this area right here. We're filling in this area here. This looks like it is likely to be a day of just backfilling and sideways. Not seeing anything on the calendar to propel this, not seeing anything in the news that would propel this. Surprises can happen, but overall, we have made a new all-time high, and it's likely to be a resting day. That's the conclusion. So we've answered all the important questions. What have we done? What are we trying to do? How good of a job? What have we done? We've pushed to new all-time highs. We've balanced at 80, and we have held the prices up here. We continued to push higher. We pushed and accepted 95, and we're sitting sideways. How good of a job have the buyers done? They've done a great job so far. It's very, very methodical. It's a P-shaped day with a flag or balance, another P-shaped day with a flag or balance. And so I'm expecting this thing to be stuck in this area today. So we've established balance now between 44.75 and 44.95. That range now is our new all-encompassing, having priced in everything that we want to price in. This is the range that we like. 20-point range. It's pretty tight. But overall, as long as we remain above this 75 area here, we are likely to continue to squeeze into 4,500. So that's the bigger picture structured trade. As long as that 75 stays intact, the 75 goes, and we are likely to fall through the flagpole here, climb all the way down through the flagpole, back down to 44.51.50, where we had those triple tops, and that's the next balance. So remember these prices, please. 4,500 above, that's the key target still. We missed it by 2 points. Then we have 95, then we have 80, then we have 75, and then below that, 50.51. So as long as you remember these key areas, you can keep yourself in check and not be so involved or aggressively pushing for one thing or another. The trade is very, very structured. It's very structured, very controlled right now, which is okay. I prefer volatility, but that's where we stand. That's a summary of where we were in the overnight session. Let's take a look at the big picture. The big picture, let's break it down to the basics here. Let's break it down to the basics here. There's nothing about this that says the sellers are winning. Okay, so every dip gets bought. There's something like I forget the figure, something like $4.3 trillion in cash, in resting cash, in the economy, in corporations that are on the sidelines. These funds can buy stock, can buy back stock. Companies can buy stock with them. They can acquire with them. You've heard about Western Digital acquiring, I forget the company's name in Japan that creates nano drives. Um, there's a lot of cash that can still be deployed here. So managers are buying the dip every time, it seems. And so there's nothing here that says the bull trend is over. So again, structured trades, look for longs, look into 4,500, expecting a test of 4,500 at some point between today and tomorrow. We missed it yesterday. That was our target to the upside yesterday, missed by 2 points. The overall picture right now is that we are making, once we put in a low, this triggered one-time framing up, and one-time framing, meaning higher lows, is in effect, is currently in effect. So the day time frame is trending up, although you can see we're making smaller and smaller bars as we push higher. And we did that throughout this. It doesn't stop it from continuing higher. What's nice about this is when it does sell off, it takes back about a week and a half's worth of rallies before the buyers step in and buy the dip. So again, it's not a very exciting market to trade on a day-to-day basis, but stick with the story. I know it's a bit of a grind, but that's part of the job. Stick with the story and make sure you're maintaining a grip on what the overall picture is. Let's take a look at what's expected for today. Today, again, we're opening in complete balance. We have this balance above, and we have this balance below, right? This balance below. Very important to keep track of that. The expected play today, open auction open auction in range below yesterday's value. I'm expecting this to make an attempt at the 95, push the 95, squeeze, and then slowly walk itself to the 4,500. Push the 4,500. We've been pushing the century figures by somewhere between 3 and 6 points. 45.06 potential top here. 06, not sure. That's just a guess. And then consolidate and hold steady for the rest of the session. That's what I'm looking at for today. There's not much here that would prevent or scare buyers away from doing this. The sellers have just been incredibly weak. The secondary push into 95 where we see rejection of the point of control. So again, 95 is an important area. Rejection of the point of control. Consolidate in the middle here, and then finally test the 80. And would be nice to give us a test of the 75 for a bounce consolidation scenario 2. There's a potential here that if the 75 doesn't hold, we are likely to slip very quickly into 67. And then we have 54, 54 down into 50 as key areas. I outlined those levels yesterday. Same thing today. That's it, guys. Just stay disciplined. We're getting close to the end of the summer here. We have another, week and a half until Labor Day. And Labor Day marks the end of summer and the start of fall here in the U.S. So just be patient. Preserve your capital for opportunities that you can deploy it into that come in around the busiest time of the year, which is around October. Okay, so hang in there and just maintain your discipline. I'll catch you tomorrow morning. Take care.